We just got the FOMC Minutes report, and it seems to be a little bit on the bullish side. There was good and bad that was said, like the Fed did acknowledge that asset values remain elevated, which is initially what took the markets down in these big candles. And then what actually came out in the report is that the Fed wants to go super fast right now to get rates high so then they can essentially pivot later in the year and reevaluate economic conditions. So that's the long story short. We are going to go ahead and read exactly what was said because I don't really expect a huge move by the end of the day today, by the next hour or so, but I do expect a bigger move tomorrow, and I think ultimately it will be a bullish thing. So let's get into all of this key information. Then we're going to dive into everything you guys need to know about our favorite stock. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys do want to support the channel and join the journey with us, link down below for the Patreon. Go ahead and check that out and get yourself those free stocks. Webull, Moomoo, and Public down below in the description of this video. But nonetheless, let's get into exactly what was said. So this is the main article right now on CNBC, and they paint it in a very bad light. It says Fed minutes point to more rate hikes quicker than the market anticipates. It says Federal Reserve officials earlier this month stressed the need to raise interest rates quickly and possibly more than markets anticipate to tackle a burgeoning inflation problem. Meeting minutes released Wednesday showed. Not only did policymakers see the need to raise benchmark borrowing rates by 50 basis points, but they also said similar hikes would be necessary at the next several meetings. They further noted that policy may have to move past a neutral stance where it is neither supportive nor restrictive of growth, an important consideration for central bankers that could echo through the economy. Quote, most participants judged that 50 basis point increases in the target range would likely be appropriate at the next couple of meetings, the minutes stated. In addition, Federal Open Market Committee members indicated a restrictive stance of policy may well become appropriate depending on the evolving economic outlook and the risk to the outlook. The May 3rd through 4th session saw the rate setting FOMC approve the half percentage point hike and lay out a plan starting in June to reduce the central bank's $9 trillion balance sheet consisting mostly of treasuries and mortgage-backed securities. That was the biggest rate increase in 22 years and came as the Fed is trying to pull down inflation running at a 40-year high. Market pricing currently sees the Fed moving to a policy rate around 2.5% to 2.75% by the end of the year, which would be consistent to where many central bankers view as a neutral rate. Statements in the minutes, though, indicate that the committee is preparing to go beyond there. All participants reaffirm their strong commitment and determination to take measures necessary to restore price stability, the meeting summary stated. Quote, to this end, participants agreed that the committee should expeditiously move the stance of monetary policy toward a neutral posture through both increases in the target range for the federal funds rate and reductions in the size of the Federal Reserve's balance sheet, it continued. On the balance sheet issue, the plan will be to allow a capped level of proceeds to roll off each month, a number that will reach $95 billion by August, including $60 billion in treasuries, $35 billion for mortgages. The minutes further indicated that an outright sale of mortgage-backed securities is possible, with notice of what happened of that happening well in advance. The minutes mentioned inflation 60 times, with members expressing concern about rising prices even amid confidence that the Fed policy and the easing of several contributing factors such as supply chain problems combined with tighter monetary policy would help the situation. On the other hand, officials noted that the war in Ukraine and COVID-associated lockdowns in China could exacerbate inflation. At this post-meeting news conference, Fed Chairman Jerome Powell took the unusual step of addressing the American public directly to stress the central bank's commitment to taming inflation. Last week, Powell said in a Wall Street Journal interview that it would take clear and convincing evidence that inflation was coming down to the Fed's 2% target before the rate increases would stop. Along with their resolve to bring down inflation came concerns about financial stability. Officials expressed concerns that tighter policy could cause instability in both the Treasury and commodities market. Specifically, the minutes cautioned about, quote, the trading and risk management practices of some key participants in commodity markets that were not fully visible to regulatory authorities. Risk management issues could give rise to significant liquidity demands for large banks, broker-dealers, and their clients. Still, officials remain committed to raising rates and reducing the balance sheet. The minute stated that doing so would leave the Fed, this is bullish, well positioned later this year to reevaluate the effect policy was having on inflation. So this is kind of what I've been saying here on this channel for the last 3 to 6 months now. It's essentially saying that, hey, the Fed needs to get rates up. They need to do it faster than what the markets were expecting. This was back when we were only talking about 0.25% rate hikes, like 3 or 4 of them throughout the year, right? This was back in January. I was saying this. And they have to get rates up so much because typically when an economy, the American economy, starts to decrease in value, GDP starts to go down, you go into a recession, what the Fed does is they cut rates to stimulate growth, right? Pretty straightforward. But in this time, you had growth slowing down at the same time the Fed was raising rates. Typically, that does not happen. Typically, growth is very good when the Fed goes to raise rates. So they have to act more aggressive. And then later throughout this year, in the second half of the year, they can essentially stop raising rates as aggressively and actually start to take a look at where the economy is. And that is the bullish part. It's kind of giving us a deadline to this to a certain degree of when we can kind of expect the Fed rug pulls to stop. So it really looks like that last line, after all, might be what the markets pay attention to tomorrow, and it could give us that after effect, that digestion style rally. Well positioned later this year to reevaluate the effect policy was having on inflation, aka look at what's going on in the overall economy and see if we need to stop doing this. Because kind of what I've been saying for the past couple of days now is, the Fed's trying to raise rates to get inflation down, which is all fine. But what is really hurting families the most, it's food and energy cost. And the Fed cannot control that. So sure, other things going up besides food and energy suck. But the biggest things that are actually hurting American families, they can't do anything about. So it's giving this a timeline to go off of, and we have seen an incredible amount of pain to start the year so far, with the NASDAQ down over 26% year to date in the first 5 months. It's absolutely terrible what has happened out there to pretty much everyone's portfolios. It's saying, hey, you're probably okay buying long duration growth stocks at this point. So I would imagine, obviously not a guarantee, I'm not a fortune teller, but I do think tomorrow could be a substantially positive day based off of this. And I think this could actually help solidify that 380 level on the SPY was actually a bottom. Now let's talk about what's actually happening with AMC stock today. Take a look at the option activity, short interest, everything you guys need to know, because the stock is up almost 11%, currently up 10.78%, heading into the last, call it 45 minutes of the trading day today. It could be about an hour and 20 minutes left of trading. So give or take, these numbers could be different by the time you guys see this video, but still this information will be very, very relevant. Now, I do first off want to start with the Ortex data, and we'll go ahead and pull up AMC. Take a gander at what's going on today. I want to look at the option activity first things first, and you're looking at 9 orders totaling $8.09 million, positive order value of 100%. Another very strong day of positive order value with a lot of money flooding into some of these options. Take a look at some of these positions. $604,000 placed on June 17th, $20 calls. That's a lot of money going in, buying 13,000 options, betting for a move substantially higher from where we are currently at. So I think that is for sure a good sign. And you also have GameStop up 25% off of these borrowing rates that are going up. Even AMC's borrowing rates are going up. But I think, long story short, it's really the executive order that is having a big impact to what is happening to GameStop and AMC today, which we will talk about that more the video that comes out at 4 p.m. But overall, I gotta say, it's looking pretty good from what we were talking about. We could get this next leg of, call it the MOAS or another rally coming here very, very shortly around June 2nd and June 3rd. So we will see. But as far as the short interest of free float, that is sitting at 22.23%. Current shares that are sold short of 114.6 million. Cost to borrow max at about 8%. Utilization at 100%. Days to cover at 3.38. The free flow out on loan is 32.38%. So there's a lot of shares that are currently out there that are not quite sold short yet that could play a big role, after this rally comes. I think the rally is going to come pretty hard, and then I think it's going to come down pretty hard as well, given the free flow out on loan is absolutely wildly high right now. It's about 10%. Of an increase to the actual shares that are sold short. So pretty wild overall. Days to cover, everything is looking good. When we really do start to get big volume that comes in, the stock will go absolutely crazy, in my personal opinion. So that is that. Option activity looks good. Short interest, all of that obviously looks good. If we take a look at the stock O tracker data and go ahead and refresh this page, we can see that for this upcoming Friday, you have about 10,422 calls that are in the money, 135,000 calls that are out of the money. For the put side, about 20,500 puts that are in the money, and about 44,000 puts that are out of the money. So all in all, looking very bullish for this week, but the big week that I do want to hone in on is going to be June 17th, and we're going to specifically take a look at the options and where the option activity is for that week, because that's what ultimately I personally think is going to help the stock go through this rally that I see coming. All in all, a very strong day for AMC stock, but in the grand scope of things, even after this almost 11% move, we're still at the lower end range that we have been at for weeks now. So to see, the stock get back up to $20 before the executive order goes into effect, to see the next couple of trading days be very, very bullish, would not surprise me at all. That's kind of in line with what I expect. But if you do see a negative market reaction and digestion of this Fed minutes report coming tomorrow for whatever reason, if there's something the markets latch onto that is negative, watch that $10 level as potential support. If not, $13 is the key level we have to break out and close above, and then it's going to be $15. And then ultimately the 50 and 100-day moving averages up here at about 17 to 17.50. You have both of those moving averages. So those are the key levels. That's what you guys need to know. RSI is still extremely oversold at 38.85. Neutral is 50, so you're definitely on the oversold side of things. The MACD, pretty neutral as well. Doesn't want to form a clear direction, but overall pretty neutral. Volume on the day sitting at about 43 million, so also pretty average, kind of on the low end range for what we see sometimes over the last couple of weeks for AMC stock. So that is going to be all for this video. Hit that like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Come join us on the live stream in between 10 and 11 p.m. Eastern Standard Time every single night. We are live and it is a blast, so come join us on there. Get your free stocks as well down below in the description. Join the Patreon if you guys want to be a part of that. Get access to all of my trades in real time. That is going to be all. You guys enjoy the rest of your day, and I will see you in the next one.